Hello, and welcome to the Invest with Carl podcast. This podcast will bring you obviously everything about Carl Investments, discussions about new features and strategies being launched, as well as commentary on general alternative investments news, slanting towards quantitative perspectives and the general democratization of sophisticated investments. Or said simply, bringing high-quality, sophisticated investments to all investors. We're looking forward to the conversation, so let's get started. Hi, I'm Jamie Uppenberg, your host today and a member of the Carl team. We're chatting with David Bush from Alphatative that manages the Stratversify Enhanced Quantitative Hedge Fund strategy. We're going to find out today what makes this fund so successful and the usual fund history, what's important for investors to know who are in this fund, as this is a new fund to our Carl family. We are Carl, digitally offering quantitative hedge fund strategies as funds of funds, providing packaged and data-driven delivery of these funds to accredited investors. Stratversify Enhanced is an offering from Carl as Victory Peak. Welcome, Victory Peak. David has been self-employed for over 35 years, and years ago, as a professional musician, he worked with Grammy Award-winning and nominated artists. And while he was doing that, he sharpened his investment savvy, becoming both an independent trader and investments educator in the US and the UK. Today, obviously, David focuses on his management of Victory Peak out of Southern Ohio. Hi, David. Welcome.
Hi, Jamie. Thanks so much for having me.
It's good to have you. So we're really excited to bring Victory Peak onto the Carl app. And we do always kick off our new strategies with the burning question of the day. What has made Victory Peak so successful so far? And why do you keep it in your portfolio, aside from the fact that you run it?
Yeah, well, that's a very important question. Great question. The reason I believe that performance has been successful, at least in my view, over about 10 years now, is that the logic that drives it is able to generalize well. So unpacking that a bit, simply the rules that drive the strategy, they are sophisticated yet simple. And that is really part of my philosophy, and our philosophy is simplicity, sophistication, yet simplicity equals durability in a sense. So the ability for the strategy to navigate environments that, of course, have never occurred before, may be vaguely similar, or maybe quite similar to events in the past, technically. I think that is really part of the major part of the success of the strategy.
And what is the core of this strategy? What do you guys trade? How do you describe it?
Yeah, very simply, the strategy is mean reversion. It's comprised of many systems which make up the strategy as a whole. The universe is a mega cap equity universe, so it's blue chip stocks. And this is primarily at this time, it is the OEX and the NDX. So it takes the S&P 100, the NASDAQ 100, combines them. There also is an element of the strategy which we call the vol cap element or systems within the strategy. And they trade volatility products, ETFs, so exchange traded products, which are designed to capture volatility in the event that usually the market is distressed and heading lower as a whole. So it is a non-exotic universe that we trade, but deeply liquid and very institutionally backed.
Excellent. So then from that world and from those components that you have for this strategy, how have they changed over time? Like, has Victory Peak the same as it was when you started, or like what are the adjustments that you've made as it's evolved?
The simple answer to that is that there have been essentially no changes to the core logic, but many changes to risk management. So this is kind of part of my evolution. Words, I created the strategy originally for my own capital. My own capital is still in it, but that was my sole purpose at the outset. I developed this over a couple year period. I developed a survivorship bias-free data set, which is very important to a mean reversion strategy, especially in the stock market, where we have infamous tickers or companies that live in infamy, such as WorldCom, Lehman, Enron, and so on. You need to see that data in the model. So at any rate, I launched it on my own capital. And what I really realized as I started to go out and court some institutions and so forth a few years in was that there needed to be more risk elements, more risk management, et cetera. So that's really the evolution of the strategy is pretty simple in the sense that the core logic that drives these edges that generalizes well so far over about a decade is almost exactly the same, while the risk management pieces, controlling exposures, adding a volatility capture element, and so on, these have evolved.
Great. So it sounds like, obviously you made the strategy for yourself and then it was working. So you're able to move out to the institutional investors, which is, common for hedge fund strategy. And obviously you captured some of them. And made some adjustments. Now, risk control, very interesting to Carl, the staff at Carl, myself. Also, we think to our Carl investors. So we'll have a whole nother conversation about that, but that's great to hear. Love to see that those controls grow and evolve over time. The other part of this that's evolving then is you're coming on the Carl app. And this is a change from those institutional investors to the retail investment world is digitizing. It is an investments digital revolution.
Yes.
So we see that with Robinhood and Yield Street and Fundrise and all these others. Obviously, Carl does this with quantitative hedge funds. How does this change your world?
Well, it's a fascinating question, and it's a fascinating world, as we all know, especially in this respect within finance. I think it broadens the on-ramp, and naturally, I'm very excited to be part of Carl, excited to be part of this really revolution, I suppose you could say, certainly evolution. I like things generally that flatten the earth, so to speak, to probably badly quote Thomas Friedman, more on ramps for more people and less gateways and barriers and so forth. I generally am for that. So I'm great. I'm grateful for Carl for providing additional on ramps, and I think that is the future. These on ramps and this technology that even my daughters, who are both still in their teens, are using in different ways. Not accredited investors themselves at this point, but they are using this technology to save money, to find deals, and it is all digital, and it's the future.
Yeah, we have a lot of conversation about that too, that these young people, younger than you and I suppose, their view of investments will just be completely different, right? They'll always have a Robinhood. They'll always have a Carl as a possibility for them. I just think it changes their view significantly.
I agree. Absolutely.
Yeah. So I wonder how they'll look at it, right? In another, 10 to 20 years. So will that change how you think about the strategy itself, or does it change your competition within quantitative hedge funds?
Yeah, that is a great question, or set of questions. Not change, at least at this time, how I think about markets, which are really driven by human nature. At least that is, how I see it. Of course, there are many other factors naturally, but that fact of increasing digitization and flattening of finance in that sense doesn't change how I think about markets to come, the strategy, and so forth. On the competition side, certainly, yeah, that is a different and excellent question. Certainly, the landscape is always evolving in terms of how people are marketing, how people are finding managers, and so forth. So yes, I think that will continue to evolve. My thinking will continue to evolve in that respect as well. Again, because it's pertinent, very glad to be part of Carl because it is providing that on-ramp and a really unique offering that has not existed before to my knowledge.
Yeah, it hasn't. So we appreciate that. So much change, as you just talked through. We just talked through the change in the investments universe, while at the same time, some focus stays the same: the performance, the risk controls. You're looking for the strategy to be able to move with the markets, and you feel very confident in that, which is great. There's so much data than ever before, and Carl allows our investors to see that. As our investors watch Victory Peak, what would you say is something they can feel really good about? Or said another way, what does Victory Peak work really hard at?
By design, Victory Peak aims to navigate changing regimes. So what that means is, I believe investors should feel confident that a priority of Victory Peak, both in terms of the management and the strategy, is determine what regime the market is in. Let me give you an example. So every day, the strategy will systematically determine the current regime for each stock in its universe and aims to apply capital only when the probabilities show a positive mathematical expectation. There are systems which will be more active in healthy environments, technically healthy environments, and there are systems which will be more active in distressed environments within the market. So this is built into each system within the strategy, this idea of navigating the current regime, because the probabilities differ. In a technically healthy environment, there is maybe a set of probabilities that the long systems will trade quite comfortably with that set of probabilities, and in a distressed environment, the probabilities changed. Those long systems may either go offline, so to speak, or switch within their code to a different set of entry criteria, for example. So to make it simple, I think that the navigating of regimes, it's an inexact science because the market is always evolving, changing, and yet that has helped us in the roughly decade that the strategy has been managed to perform, I would say, well or very well in many distress periods, for example.
Very interesting. I'm sure our listeners would love to hear more about that, but we'll be talking more throughout the year. So I thank you so much for chatting today, and we'll have more questions in the future. And that's certainly something we'll dive more into. Interesting how it shifts. I think our next chat is probably about managing risk. So we'll look forward to that.
Okay.
What's your final word for our investors today?
Oh, final word. I would say some diversification within your portfolio. Naturally, this is a very old concept, but I would say, look for that and do your homework and so on. In terms of Victory Peak, I would say Victory Peak is not a flashy strategy. It is designed to be even, steady. Naturally, there will be variance in returns and so forth, but the goal is to be here for the long run. That is my objective, to really last through the unknown, through the markets to come, navigate them well, not just be dialed into one type of market.
Excellent. So a lot of talk on diversification within these new hedge funds offerings. It's amazing what we can now do with that.
Yes.
David, thank you so much for joining us. Investors, thank you for joining us for another episode of Invest with Carl. And we will see you next time. Bye-bye now.
Thank you, Jamie.
Thank you for listening to the Invest with Carl podcast. The views shared on this podcast do not necessarily reflect the views of Carl. This podcast is intended for informational purposes only and is not intended to constitute and should not be deemed to be an offer to sell or a solicitation of an offer to buy any security or investment, financial advisory, legal, tax, accounting, or other professional advice. Carl funds are currently available to accredited investors with a minimum investment of $20,000. To learn more about Carl and to download the Carl app, go to investwithcarl.com.